Christian Gulain d'Amama. The broadcast is Affaires&Finances avec Christian Gulain d'Amama. Presented by Christian Gulain d'Amama, me, and empowered by K27 Vision Plus. I am with Robert Mathu, the specialist in capital market, and we are going to discuss about Burundi Securities Exchange. In French, we say Bourse du Burundi. Many of you have asked the question, what is Bourse du Burundi? It is not a scholarship like many of you have thought, but it's about anything that is about other thing that we are going to discuss with Mr. Mathu. And yeah, let me introduce you. Mr. Mathu is a capital market specialist from Kenya, and he's the CEO of Burundi Securities Exchange. So the reason why I have to do this kind of podcast is that on 12th December 2025, we launched our first stock market in Burundi, and we entered in history. And for me was something, a hope that we can hope on financial freedom. This is what is represented to me. So the question that Mr. Robert Mathu is going to answer after introducing himself, because he can do it very well than I did, is what is Bourse du Burundi? What is Burundi Securities Exchange? Welcome, the mic is yours.
Yeah, thank you, Christian. The stock exchange, first of all,
yes,
is a marketplace. It's a marketplace like any other market, only that the products that are transacted or traded in this market are capital market products.
Okay.
And that is, we call them generally securities.
Yes.
And securities are mainly in two major categories. Either they are securities representing ownership, commonly referred to as shares.
Yes.
Or equities.
Okay.
And the other category of securities are referred to as debt, or they represent debt, commonly known as bonds.
Bonds.
Yes.
Yes.
So as you can see, those two categories are the main types of securities that are actually most commonly traded in stock exchanges all over the world. Those are the two. That's why we normally, in the stock exchange, we normally have securities that I've explained. One category refers to securities representing ownership, meaning when people buy shares or when investors buy shares in a company, they become part owners.
Yeah.
They have a right to vote. They have a right to be to receive reports, mainly financial information. They have a right to attend the General Assembly, what we normally call the shareholders meeting.
Yes.
Those are the rights now of shareholders.
Yeah.
And they can vote at the annual general meeting. And most important, they also have a right to receive any profit distribution, or what we normally call a dividend.
Okay.
That is now the first category representing ownership. The other category is the debt, meaning that when the company issues debt, in the same way when a company issues the first category, shares or securities, shares for ownership, it means that those people who give money to the company, they become part owner, and that money is used by the company as capital to run the business.
Okay.
So that when they generate income and they pay taxes, and then whatever profit is left is shared among shareholders.
Okay. Good.
Okay. So that's the first category. Second category is the debt category, meaning when a company issues, or when an entity issues debt securities or bonds, it means that they are borrowing.
Yes.
And those who actually buy them, they give its capital. They are giving capital to the issuer. An issuer is any entity that issues securities.
Okay. All right. Can
be a company, or it can be a public sector institution, including the government. So when a debt is issued, either by a company or government, it means that it is a debt. The money will be returned back to the investors after an agreed time. I'll explain briefly what that at a later. So I wanted to just explain what is Burundi Securities Exchange or Burundi Stock Exchange.
Yes.
It is, as I said, it is a market.
Yeah.
And it is a market like any other market, just that it's a market where securities are traded.
All right.
So if we go to a fish market across here, we call it a fish market.
The fish market.
And the products traded there is fish. If you go to a vegetable market, we find vegetables. If you go to a cattle or animal market, that's where they trade animals. So here, we trade securities. And these securities, we call them capital market products. And they can mainly be either shares representing ownership in a company, or debt. We call them debt or bonds. Representing a borrowing. Meaning that when a company issues shares, when investors buy them, the public, that money will never be returned to them.
Yeah.
Because they become owners of the company.
All right.
But when they buy the debt, they will have to return the money at the end of an agreed time. Because debt, when debt is issued in capital market, it has to be explained to the investors through disclosing from the beginning that this debt is issued today, and the maturity of the debt can be 2 years, 3 years, 4 years, up to even 40 years.
Okay.
But once that debt is bought, it also describes, before investors buy, they know how much is being borrowed. So, and because it is being, the issuer is raising capital by borrowing money from investors in the public, they have to describe exact features of that debt. For instance, it's a 5-year debt. It is giving an interest rate of, for example, 8% or 10%, like that. And then, so it means that whoever is buying the debt, they know how much them they are giving, for example, and they know how much to expect to be earning after every 6 months or 1 year. Now, the main difference between the debt that is issued in capital market and the normal debt that is raised in banks is that for banks, interest is paid every month.
Okay.
But for capital market, interest is paid once or twice a year. And that's why we normally say the capital market is a market for long-term capital.
Long-term capital.
Yes.
Okay.
So having said that, I'll now be able to answer your question.
Yeah.
What is the Burundi Stock Exchange?
Yes.
So it is a marketplace. What differentiates it from other markets is that the Burundi Stock Exchange, as a company, we are a limited liability company.
Okay.
With about 9 shareholders. This company was registered with ADB, that is the company registrar.
Yes.
In 2025. 2024.
2024.
Yeah.
I remember.
And it has 9 shareholders who injected capital.
Okay.
All of them are commercial banks. And as a company now, we are a corporate entity, and our work is to operate this market.
Okay.
So we have a market called stock exchange. It's a marketplace, but it is run by a company, which is us. And it is the market is a special place for raising capital because it is a public market. And what is our role as a stock exchange is to run the market, and we run the market by following rules. And it is a market which is driven by rules. And to begin with, for us to be licensed, because we are registered as a company, we are licensed by ARMC, that is the capital market regulator. Once we get the license, we had to show them what our rules are, how we shall be operating, how we are prepared. We tell them about our expectations in the future. When they are satisfied, they give us a license. So that is how we got a license.
So BSE, Burundi Securities Exchange, is a private company?
Yes, it's a private company.
Okay.
It's a private limited liability company.
All right.
Meaning that the capital of the shareholders is, or rather the liability of the shareholders to the company is limited only up to how much they are putting in the company.
All right.
Yes. So, having said that, we are a company, and as you can see, we've got members of staff, employees, who have been trained, and they are capital market professionals. Now, what is unique about the stock exchange is that it is a market which has got a unique structure, in the sense that it is a self-regulatory market. What does that mean? It means we write our own rules.
Okay.
And what are the rules for? Is to set up the market structure, and also the stock exchange is there to enforce those rules. Set up the market structure and enforce those rules. And we report to the regulator.
Okay.
RMC. Now, how are we structured? We are a membership company. What happens is that we help, or it's a marketplace where we bring those who need capital and those who have capital in one place, so that they can transact. Transacting meaning if it's either government, public institution, or a private entity, companies wanting to raise capital, they will come to the stock exchange.
Okay.
They don't know who is going to invest.
All right.
And then there are people with some savings, long-term savings, who are looking for a return on investment.
Okay.
But they don't know the issuer, that enterprise. So we come in, so we put in place rules governing those who are issuing, and we put in place rules governing and protecting those investors.
You know them.
Yes.
You know who investing, and you know who
is coming. But when they meet in the market, they will know each other. What I mean is, can they trust the issuer? Do you get it?
I see.
And the issuer comes to the market, and the first question is, am I really going to get this money?
Okay.
It depends on many things. But what is important for us is that we have got what we call disclosure rules. Disclosure. Disclosure rules mean that any company or entity that comes to the market, they are required to disclose all information that will be useful to the investor to assess the business, so that they can make an investment decision.
Okay.
So that is what we do. And by demanding that disclosure, investors are happy. They say, oh, the information they will ask us, has the company disclosed all the information that is required? Yes. And we even define the standards up to which those companies should disclose the information. So the investors meet at the stock exchange. Remember that for them to meet, they need professionals who will advise the issuer and also professionals who will advise and serve the general public.
Okay.
Those are intermediaries and they are companies that must be members of the stock exchange. And these are the people you can see behind me, the trading room in red jackets.
Okay.
They represent those companies.
Okay.
And once the securities go public and investors raise capital, those securities will only be traded in one place, and that is at the stock exchange.
Okay.
So if you bought some securities, for example, in the stock exchange, you will only be able to sell them to another person through the stock exchange, at the stock exchange. Okay.
Okay. To sell them, do I need to be an entity, or
no,
I can sell
for
them?
For investors,
okay.
If you're an investor and you have money to invest, you can be an individual.
As a Christian Ghanaian,
yes, you can invest.
I can invest.
Correct. You can buy securities.
I can buy securities, and if I want to sell them,
you can sell, and you can only do that here at the stock exchange.
Okay.
So, but for you to do that, you have to go through people who know how to do it. We don't do it directly at the stock exchange. We have members, and it's why we said it's a membership organized market, because our market is rule-based. Not everyone can come. You see, in some other products, you can see everybody out there buying and selling goods, which is okay, normal. But for us, we have put rules in place because we are dealing with people's money. And you want to mobilize capital for long term, and this is money sensitive, and that is even why we have banks.
Okay.
Banks exist, and they are licensed entities, licensed and supervised by central bank. And for them to be licensed, they have to meet very stringent requirements. Capital requirement. They need to have management. They need to have physical facilities. They need to have information technology infrastructure to run a bank. Okay. Why is all that? Yeah. It's because they are required by the central bank to keep people's money safe.
All right.
And to be transparent to their customers. Now, for us, it's the same thing. Because we are dealing with people's money, capital, we have set up in place these structures. And now, as I mentioned earlier, we put in place the rules to run the market. So we have a structure, and the structure is such that the only people who can come and buy and sell securities on behalf of the public and entities, by public I mean retail investors like you, and also institutional investors and other types of entities can come and buy securities in the market, but they can only go through members of the exchange. Okay. Why do we have members? This we are calling members. They are actually intermediary companies. Okay. Some of them are subsidiaries of banks.
The word commissionaire?
Commissionaire, yeah. The stock
applied
brokers.
To applied to the situation.
Yes. Now, in other businesses we call them commissionaires, but in our business we call them stock brokers.
Stock brokers, all right.
Yeah. Okay. They are stock brokers because they broker. Stocks are securities. So to broker means you are helping one person to buy and the other one to sell, and you put them together. It's the same concept as the one for commissioning.
Okay.
Now, for us, not everyone can do that. Only members, and it's because for them to be able to operate on the stock exchange as intermediaries, they also have to meet specific conditions and requirements, meaning they apply to us, and they also have to get a license from our regulator, just like us. Once they have the license, they come here, we admit them, we train them, We give them conditions for operating. They know the rules of trading. They know the rules of companies coming to issue securities.
Yes.
They know rules of transacting. And they also know the rules of dealing with their customers.
Okay.
They know how to advise their customers. They know what to do and what not to do. For instance, each of them, one of the conditions we give is that they have to have to separate, to have 2 separate accounts, bank accounts, so that when customers give them funds to invest, when they receive the funds, they do not put it in their own accounts. They put it in what we call customer account,
Okay.
which we are able to see, and the regulator is able to see if we need to.
Okay.
And after they have served the customer and invested for them, they charge a small fee, okay, for the services. Once they earn that fee, that is when now that fee, they are able to transfer the money from the customer account to their own account, because now they have earned it. So you can see each of them in a bank, they have 2 bank accounts.
Okay.
One for their customers, which we normally call a trust account, money belonging to investors. So when they receive money, that's where they put it. If they don't transact and fail to transact, they have to return it back to the customer. Yes. Okay. Yeah. So I was just trying to explain to you what is a stock exchange.
Yes.
A stock exchange is a market, but we as BSC, we are a licensed intermediary, and our work is to organize and manage the operations of the market.
Okay. So
we admit members, and by the way, what I should also explain is that as a company, we have a board of directors, we have shareholders. I mentioned earlier, we have shareholders who are currently mainly banks, and we also have a board of directors representing the shareholders also, and then we have now us here, management, and then we have admitted members of the stock exchange. We call them stock brokers, and then they are the ones now who actually do the business of buying and selling. Our work is to give them the rules, our work is to train them, and our work is also to promote this market. Now, we do oversight. It's like we are self-regulating ourselves, but we report to the our regulator, ARMC.
Okay.
And what I wanted to say also is that as a stock exchange, because of the need to make these services accessible to the general population, to investors, stock exchanges are associated with putting in place information technology platform.
All right.
So if you ask most people what is a stock exchange, they will tell you it's a platform where you can access shares. But I wanted to explain it in a way that at least people can relate with. Okay. Yes, it's a platform, but at the end of the day, what is important is that it is a market. But because businesses have been automated and even digitized to the extent that in many markets you find that the general public is able to access the market
through their phones.
Yes, through their phones. That's right.
Yeah.
And what I would like to mention is that, as you said, we just launched last month.
Yes.
And we are also in the process of putting in place a platform that will make it easier for investors to access. For instance, you know, when you digitize services, the cost of transaction goes down substantially because sometimes people will only visit an intermediary once, the brokers once they open their account, they go back to where they are coming from, and they continue operating from the phone. So they save a lot of time and the cost of traveling. Yeah. And also the advantage of having a digitized platform is because you realize that the stock exchange is based in Bujumbura, the capital city, like any other, most of the other countries the stock exchanges are usually in the capital cities, in the
Okay.
financial cities, capital centers, and the rest of the centers are served through
applications or
yes.
through funds.
Exactly.
Yeah. And a question came through. So, what is the difference of saving account in a bank?
Yes.
And investing in bonds? Because if you you see, you can say that they work as the same. They are the same, or?
Okay. I'll come to that right now.
Okay.
I should have mentioned this, that the stock exchange is a financial services company. So we fall within the financial sector.
Yeah.
But the financial sector has got different subsectors. So we have the banking sector, we have the capital market, and we also have insurance sector, we also have the pensions sector.
Yes.
So all these are financial services. Now, the main difference between the capital market and the banks is that in capital market, banks are deposit-taking institutions.
Okay.
Deposit-taking. They receive funds from customers, and they keep them in safe deposit. And of course, they are also able to give income in form of interest. Especially for savings account, and they also offer the normal banking services. But in our capital market, the intermediaries in capital market are non-deposit taking institutions. We don't take deposits.
Okay.
I'll explain that. We only offer investment services. We as a stock exchange, we are a service provider. We don't touch public money. Okay. It's our members that interact with the money. But that money will always stay in a bank somewhere.
Yeah.
So when an intermediary, either a stockbroker or an investment bank is a non-deposit financial institution. Okay. Non-deposit taking. They don't accept deposits from public. Yeah. What do? They offer services and they help companies to raise long-term capital. That is investment services, and they help corporates and public enterprises, including governments, to raise capital. This is the difference. Our market is for long-term capital, and the banking sector is for short-term funds. Okay. Most of the money in banks today constitute funds that are our salaries, working capital, whether it is from government, issuing treasury bills and bonds. The short-term end, that is max capital, which can be, that is funds on call. I mean, our salaries, for example, people who are employed, you realize that, consultants like us, we need money to keep funding our businesses. So that money, when we put money in the bank, we can go for it anytime without even notice. Yeah. But for capital market, we are investment services providers, meaning that our intermediaries, will help investors to invest. So when the funds come to our intermediaries, those funds are directed into enterprises, into businesses, or into issuers, or even up into government, so that the money can be invested, can be spent. So our work is just to direct those funds from those who have got savings to those who need the money. But we don't take those deposits and keep them the way banks keep to give a return. I don't know if I'm clear on this. Yes. So that is the main difference, that we are not like banks. We don't take deposits. Yes. We offer investment services. Yes. In fact, our investment professionals or intermediaries sometimes may even advise customers where to invest. They can structure a portfolio for them. Buy security A, buy security B. So they have a portfolio, and they can tell an investor, for example, in your portfolio, you also need some cash, so put it in the bank.
Okay.
So they can also advise customers actually to put it in a bank. But when they are putting it in a bank, they will be telling them the cash account in the banks, you need some liquidity within your portfolio, for example. But of course, you normally have to structure a portfolio over time, because savings are scarce and people start saving small. And in our market, when investors come, they are supposed to start small according to their means. The difference is this: when you invest through our market, you are able to invest small, but continuously over time. Then you build a portfolio. After a couple of years, depending on your ability, there are those we call normal retail investors, but there may be those who have already got some funds, and we can call them high net worth individuals, people with a lot of money. So that money could be lying somewhere in a bank, and they're earning a specific, return on their deposit. But when they come and the capital market is able to give them a return on investment, sometimes it is for long term. So those who build their wealth by consistently investing through capital market over time, they may decide later on, after accumulating the wealth, it's time now to sell, okay, and go and invest in something else, like real estate, in a business, and so forth. So the capital market is there for long-term investment. It is there to help households and enterprises to accumulate wealth through savings over time, and these savings are channeled into the rest of the economic enterprise. Okay. That's why we call it a capital market. We help to raise capital. Where does this capital go? Into the economy. Difference is, without a capital market, it's very difficult for enterprises to mobilize long-term capital. Okay. That is the difference. So you're only left with the usual commercial banking sector, which does a very good job. Commercial banks are very, very important in the economy. That's a fact. Now, we supplement funding of the economy by coming to provide the longer term end of the economy. For example, investment in infrastructure. When we say infrastructure, it has a very big meaning. Because we can have big ticket infrastructure, roads, airports, bridges, railways, airlines, electricity, we call them utilities, electricity, technology, housing, information technology, yes. All that infrastructure normally at a national level require large amounts of capital. And the best way to raise that capital is through the capital market. Okay. Up to including the following. Commercial banks, even today, they always require to enhance their capital requirement by the regulator, or they can do it for purposes of reinvestment. Where do they get the capital from? From their shareholders. But shareholders can be limited. If they are few, then it means that they can only raise capital up to a certain level. But if they come public and they open up, banks can also actually expand their capitalization. And that is why you find that in many modern economies, you find more than 50%, 60% of banks, they are on the stock exchange. They are listed on the stock exchange. They are listed on the stock exchange. Yes. So we are also looking forward to have Burundian banks ultimately come and list on the stock exchange in order to expand their capital base and be able to take up more deposits and do their banking business. Okay. Yes. So saying that, another question came through. So sorry, before I just want to make a distinction. Yes. Because if we stop there, we might give an impression that the stock exchange is only there for big businesses.
Yeah,
That
was the question.
Good.
Was going.
Now, having said that, I was giving an example of the importance of the role of the capital market in terms of funding the economy.
Yes.
So we said big ticket items like infrastructure and so forth, which cannot easily be done by family businesses, small enterprises. So we come to the level of normal business. Yes, they also come to the stock exchange.
Yes.
So a supermarket can come and raise capital here. A petrol station can come and raise capital here.
Yes.
A tea company.
Yeah.
An agricultural farm.
Yes.
Agro-processing businesses, they can also come to the stock exchange and raise capital. So when we aggregate all these, plus the public sector I mentioned earlier, then you realize that the stock exchange has got a very big role.
Yes.
So that's why I believe the BSE has got a significant potential for growth into the future in terms of contributing in the country's vision for developing and becoming a developed nation by 2060.
Okay. Yeah. What about low-income people, individuals? They can.
Yes. Individual households, individual person like you,
like me,
and myself also.
Okay.
I can also invest in the market.
Okay.
My staff, other employees, household, business people out there. Normally, the advice is they need to visit a stock brokerage house, or the intermediaries, or an investment bank, and they are able to, explain to them how to proceed using our rules. But of course, we also provide general public education to the public, especially directing the investors, both issuers, that is companies, and individual investors out there, on how to participate in the stock market. But when they eventually understand and are interested actually to make that first step to invest, it means they have to have some money in their pockets, and that is a time when now they have to go to our intermediaries. They are the ones who will open what we call an investment account for them. And an investment account is different from a bank account. In fact, to come and invest in the capital market, you require to have a bank account. Because when you are paying, you will pay from your bank account, isn't it?
Oh, I cannot bring money to the intermediaries directly. I mean, I have my money in my pocket. I go to see those guys.
You need to have a bank account.
Okay.
Yeah, because maybe you would have done that long time ago. But nowadays, because of anti-money laundering and the requirements for what we call, requirement for disclosure and transparency, the advantage of having a bank account is that banks themselves, they normally do what we call KYC. We say, know your customer.
Okay.
So if you come to invest in the capital market, you have to open an account in the same way you would open an account in a commercial bank. They need your indangamuntu, or passport, your address, your phone number, and it's for your own good. Yeah. Because it's your money. So they need to know your address, and so that they can relate, and also even the source of your income, where you are actually getting your. Because if somebody walks into a brokerage house and give cash, it would be very difficult, even for anyone to know whether that person exists. Oh. Yeah. Okay. Yeah. So you need to open an account
in a commercial bank.
In a commercial bank, but that the account in the commercial bank is cash account, isn't it? Yeah. But when you come to a brokerage house, you will open what we call an investment account. So you tell your broker, okay, after discussing with them, getting an advice, say, please buy me some treasury bonds for 1 million. The broker will tell you, this is our bank account. So you will go, if you want to withdraw cash from your bank, and put into the broker's bank account, because I mentioned the broker also has a bank in the account. Okay. So you realize that we as investment services intermediaries in the capital market, we still need banks. Yeah. We need to operate. Everyone needs a bank. Yeah. So we are actually adding up to expanding the customer base for banks. So every customer who comes to the market, they normally have to have a bank account. They come with us, And one of the requirements they come is your personal identification, your personal details, your address, and you tell us who your bank is, and also the bank account.
Okay.
Now, tomorrow, after you bought today, after some time, when you decide to sell your securities, once we sell, we don't need to come back here to the brokerage house. They will put the money in your account. You can instruct them. This is you have my details of my bank account, and they will send it to your bank account, and you will see it on your phone. As usual, nowadays when you deposit funds into account, many commercial banks most of them have got the app, the applications.
You see just notification.
You see notification. Exactly.
Okay.
Yes.
For companies, what are requirements if I want to raise as a company, as Affaires&Finances, as a company? If I want to raise capital, funds.
Yes. If you want to raise capital.
And
actually, this is what happens also. Yes, we are a capital market, a market for long-term capital. But as the market progresses, you can also be able to raise short-term capital, working capital, on the stock exchange using specific instruments called commercial paper.
Okay.
A commercial paper can be issued by, a petrol station, a supermarket, even a hospital. Okay. Commercial hospitals can issue a commercial paper. They come, they issue the commercial paper, they raise the capital.
Okay.
Now, but in the mainstay of the stock exchange is for long-term capital. And as I said earlier, when you buy shares in a company, the company will never return your money. But because the stock exchange exists, if you need your money back, you come to the stock exchange. If you buy shares today of a company, say a coffee company or a tea company, today you buy the shares. After a few days, after a few weeks, after a month, after a year, whatever time you need cash and you decide that you want to sell the securities, you don't go back to the company, you come to the stock exchange. And actually, the ability for an investor or a shareholder of a company to sell shares on the stock exchange is what encourages that customer to buy the shares in the first place. Because if I invite you to my company today, for example, to buy shares of the Burundi Securities Exchange, for example,
okay,
that's our company. You'll ask yourself, I put shares, I invest in the stock exchange shares, yes. And then you ask, suppose I need my money back, or suppose I need my money.
Oh, right.
Yeah. Right now, once you buy, you cannot return the money back to you. But when this company also becomes listed on the stock exchange itself, we tell you, you ask me, how do I get my money back? I will explain to you. You go to the stock exchange and sell the shares. There are many people at the stock exchange who will be willing to buy those shares. So what we offer at the stock exchange, therefore, is liquidity. The ability for investors to exit their investments, because it's a marketplace. Okay. So the advantage is that once an enterprise sells securities to investors, they collect the money. As for example, a cement company, they can come to the market, they raise several billions of Burundi francs, and they go back to their mining site, and they build a factory there. They'll continue making cement without investors ever wanting to come back to them and ask, hey, where is our money? I need my money now. I'm going to take the tire of this car. No, that's not the case. What they'll do, investors, once they have bought, the company is left to continue generating income and therefore profit for shareholders. When those shareholders or investors decide they want the money, where do they go? They go to the stock exchange. So you asked me what are the requirements. Back to the question. Now, the requirements of raising capital on the exchange are very basic. First of all, you need to have a minimum, level of capitalization.
Okay.
And all these are actually, the requirements are contained in our rule book. The one I mentioned to you, we have a book of rules, and in this case, it contains what we call listing requirements. And this listing, it means that when you issue securities to the public, you will have to come and list them on the stock exchange. A list is a list. We just put you, it's like saying putting you in our book.
Okay.
So listing should not be complicated. Now, first of all, we have rules covering capitalization. We have rules covering governance structure, and that's very important for us.
Okay.
Yeah, when you want to raise capital in this capital market, you need to meet certain minimum level of corporate governance. You must have a board of directors.
Yes.
You must, first of all, I should have started there. You must be a legal entity.
Okay.
You must be a company.
Registered.
An individual cannot raise capital. Individuals come to the market to invest. Other companies come. But if you are coming to raise capital, you have to be an entity.
Yes.
Yeah, like, government or a registered company. By government, we mean central government and the local governments. Like the city of Bujumbura, a local, the provinces can also do it, what we call the local government, quasi-government institution. Parastatals also, because they are registered, because they are created by law. So some of them can also come and raise capital here. So the first requirement is you have to be a registered legal entity, registered. The second one is you must have a corporate governance structure where you have a board of directors, and I think the minimum number of board of directors are 3. And it can be a family business, no problem. Okay. You are allowed, only that the regulator will require you to have an independent director in your board. Okay. So if you are 3 of you, 1 of you must be independent of the family, not related to the family.
It have to be anonymous society or?
No, that's the other thing. You need to be a public company.
A public company.
Not private.
Oh.
No, see, like in our case, you have to be public. As we are private, for example. Now, many companies are private companies. Yeah. You know what to call it in French.
Yes.
But because there is a difference. In a private company, transfer of shares is restricted. If 2 of us register a company as a private company, me and you, you cannot sell those shares to anyone else without first offering them to me. That's the law. Yeah. But a public company, so that restriction is removed. Okay. So we tell you first, you have to make sure that the shares of that company are freely transferable. Since many companies are private, when they want to come to the stock exchange to issue or to raise capital, if it is ownership, meaning shares, okay, then they have to remove that restriction. So they have to go back to ADB and change the status of the company. You can convert it from private to public and make the shares freely transferable. Why? Because once the company is listed, the shareholders don't want the inconvenience of every time going to company registrar again and giving notice to the other shareholders. Once none of them is buying after maybe 3 months or 21 days, and that's when now you are free to sell to anybody else. So you can imagine you want cash now, you have an asset in your hand, securities, but you cannot sell immediately. Okay. So we remove that restriction so that if you wake up in the morning and decide you're coming to the stock exchange sale, you sell and you get your money. Okay. Yeah, that is a legal requirement that the shares must be freely transferable from one person to another. That's another requirement. Then there is a minimum amount of money you can raise in the capital market. It's normally about $1 million, roughly. Okay. Yeah, but $1 million money of like 4 years ago, about 4 years ago. Yeah. But we have these requirements, all of them, in our books.
So, be clear on here. Those capital requirements, do I need to have them, or I need the issuing that I put on market? I mean,
Oh, no,
the
no.
capital I want
There is,
to raise.
no, it is how much you want to raise.
Okay.
Yes. How much you want to raise. Yes.
Thank you.
Yeah, that's the minimum capital that you need to raise. Yeah.
I see.
Not the minimum that you need to have, no.
Okay.
Yeah, the minimum amount that you need to raise.
Okay. There's no minimum amount you need to have to come in. It's not listed. It is not listed.
No.
The minimum money you have to have.
No.
Okay.
Yeah. It's because to set up any business, first of all, you need to have capital.
Okay.
Isn't it?
Yeah.
Any business.
Yes.
Even you now, right now, you have invested in your business.
Yes.
You have staff, you are paying, loyer, you have equipment, salaries and so forth. So all these require capital. So when you start a business, all that is considered to be your capital.
Okay.
In monetary terms.
Okay.
Yeah. Even when you go to Adebe, you normally have to say what your capital is. So that's why we just allow them to come in. Of course, in many markets they have that restriction, but it is very important to know that business enterprises always have capital. What is important is the minimum amount that you can come to raise in our market, because and that's what I was explaining to you.
Yeah.
And that one is, it depends on the type of business.
Okay.
If it is a big bank or a big infrastructure project, it will be in billions, several billions, hundreds, isn't it?
Yeah.
But if it is a normal business
Like
out
us.
here, yeah, you will raise depending on your level of business.
Okay.
Yeah.
Good. So the last question will be more like a call to action.
Okay.
Yeah, a call to action. You sell to us the advantage of working with Burundi Securities Exchange. Yeah, through the camera.
Well, I think I should understand your question first clearly.
Yeah, I mean call to action. It's a call to action to people. So why do we need to go to invest, to work with Burundi Securities Exchange company or individual to invest in stocks?
Okay, first of all, the stock exchange is a very important place for building individual wealth and collective wealth. And the reason being that yes, we can save money through banks, but when you keep cash in a bank account, the chances that you'll go and withdraw it and consume are very high. That is one.
Okay.
And the interest rate in the bank, it's okay, it is known. However, you can also save your little savings, surplus savings on the capital market, because you are able to buy an investment in small units. Give you an example. For people who would like to own their own homes, their own houses, some people want to start a small business, especially young people. Sometimes if they wait to save cash, it becomes very difficult. Because cash always have many needs. That's one. And our market is structured such that if, let's take, I mentioned that many types of businesses can come to the market. Today, for instance, if you wanted to invest in the telecom sector, you cannot as an individual.
Okay.
Because the telecom companies are private companies right now, meaning their shares are not available to the public. But if they come to the stock exchange, you can also invest in the telecom sector. So you also enjoy that return. If a bank comes, you're investing in the banking sector. If real estate company come, if a cement company come, they are selling a lot of cement or construction. If it's a construction company even, doing all these buildings and so forth. If it's agriculture company. So the advantage of the stock exchange is that you are able to incrementally put your little savings and accumulate it over time. Once a portfolio has grown, now you can decide, I can now buy a piece of land and build a home or buy a house. That's the difference, because you will not be able to buy the house in small bits. You get my point?
Yeah.
But you are able to buy a growing asset in small bits over time.
Yeah.
So the call to action will be that to encourage the the general public, the Burundian public, and by public I mean both individual investors, households, the youth, and the old, to come to the market and buy a piece of the economy.
Okay.
Yes,
All
so
right.
that they can grow your wealth in time to come.
Yeah.
Yes.
Yes. Thank you.
You're most welcome.
Thank you for your time.
My pleasure.
Yes. And maybe if we need another interview, we'll be able to.
Yes.
To work it out again.
Yes, and thank you very much for
Yes.
this opportunity.
Yeah.
For us to explain. This is a new phenomenon, it's a new business, and we will be glad to have this opportunity
Yes.
to continuously educate the general public and other stakeholders who also have a responsibility to help the stock exchange business grow, and some of them may not even be aware that they are supposed to do this. So this is the beginning.
Yes.
Yes,
Thank you very much.
it's my pleasure.